Like Michael Burry has come out and said very openly that the mother of all crashes is coming. Cryptocurrency is going to crash. And if you don't understand the amount of leverage that's in cryptocurrency, then you don't understand cryptocurrency at all.
And he doesn't understand how leverage works in crypto versus traditional markets. So right now, the most leverage people have is their house. If your house starts falling in price below your mortgage, you have what's known as negative equity. And it becomes harder to pay back your mortgage. What do? Well, at some point, you might try and sell your house and you can't sell it, and you're then losing more money and you're locking in losses. Or let's say you're trading a futures contract, which is how the financial market gives leverage to people. Well, you have something called a margin call. So you put some money up, but then you lose that money, and they kind of wire you for a margin call that you have to then settle the next day. Now, if the market crashes, you're going to lose more than you put in, more than you could afford. You can entirely wipe yourself out. And that happens time and time and time again in the financial system. Why cryptocurrencies are different is they're 100% collateralized, which means that what you get in your leverage is an instant liquidation when you've got to the point that that your collateral is worth zero. So it basically automatically takes you out of unlimited losses. So you can only lose what you put in. So that's really different. So yes, there's a lot of speculative leverage in, particularly in Asia, but it can be wiped out in 2 days, 3 days, all out. Because everyone takes their loss, they're all forced liquidations, the price collapses, and that's it. No systemic risk. Now, 10 years' time, when there's more leverage built in by other players, that may change. Right now, that leverage is instantaneous liquidation risk, big price spike, done. Well, if you think of what happened to Lehman Brothers and all of that, that was an ongoing nightmare of trying to get your assets back. Who owes what to whom? We have no idea. That never happens in crypto. Everybody knows who owns what to whom instantaneously. That's the magic here.
But what happens to institutions like the Federal Reserve Bank if people start to adopt cryptocurrency more? Because I have a feeling, you can correct me if I'm wrong, that they're not going to like it.
Correct. So what the Federal Reserve are doing is they're looking at the macro backdrop, which is the most indebted global economy in all of history. 400% of GDP in debt, of which the US is by far the largest. So you've got this situation where the world is in debt, the population is aging, you can't generate growth, and jobs are being competed for by robots, AI, globalization. So you've got this structurally very difficult world. How do you service the debt? And the answer has been to print more money. Now, printing money lowers the value of fiat currency. All the central banks doing it at the same time. So it's not just the dollar or the yen, it's all of them. So that whole printing of money means if you make something overly abundant, it becomes worthless. Now, it's not saying fiat currency is worthless yet, but basically the central banks are increasing their balance sheet by about 13% a year since 2008. That means we're all getting poorer because wages don't go up, but assets do. And assets are future savings, a future expenditure. So you stick it into, let's say, a second property as an investment, and then you'll sell it in due course because you want to realize the money to be able to spend. That's all assets are. They're deferred consumption. But it means that we can buy less of those because they keep going up. They're going up because the value of the dollar is dropping, the denominator, not because the price is rising in terms driven necessarily entirely by demand. So we're all getting poorer, and this helps that. The central banks don't want it because they don't want the debt bubble to burst. So they want you to keep in the system, devalue your savings, devalue your working salaries to try and keep this system alive to protect the baby boomers who've basically got most of the debt and most of the issue.
So do you think that's ever possible though? I mean, if just thinking about that logistically, the United States is drowning in debt. And if people move away from the dollar, how would they be able to survive?
Well, they don't have to move away from the dollar. You just need what I call a life raft. We all need somewhere to put our savings, that doesn't get affected by the central banks. And Bitcoin, the greatest example, there's 21 million of them. There's a known supply. It can never be printed. You can't increase the supply. It becomes scarcer over time. So that becomes something very interesting because it more than offsets the printing of the Fed balance sheet. In fact, it's about the only asset, aside from some technology stocks, that's done this. So don't think of it in terms of systemic catastrophe. Think of it as individuals. We've got the choice. So we won't change entirely out. Some people entirely live in the crypto world because you can earn yields and you can borrow and you can invest. But maybe for many of us, we put some of our savings there and allow our savings to grow in that space in a different way and still operate in the normal world. So I don't think it's a competition at this stage. 20 years' time, let's talk again, because these worlds are meeting. And if this proves to be a superior way, it's difficult. And the central banks are trying to fight this head on, not fight it, but kind of dovetail in with it by building their own central bank digital currencies, which are still fiat-based, so they still get devalued, but they have some of the attributes of this new technology, meaning instant transferability and accountability and that kind of stuff.
An interesting thing that I heard you talk about before is the issue of risk. And with the Federal Reserve Bank printing so much money, essentially stimulating our way out of a recession, a crash, trying to eliminate risk. And that being a reason people are moving to cryptocurrency, because we're seeing what's happening with the dollar, like you just talked about. We're seeing the dollar get devalued. I mean, is that why people are moving to cryptocurrency? Because they're worried about the value of the dollar, or do they just want to say, screw you to the government and to central banks?
I think it's all of the above. But if you think of it, again, I'm a macro guy at heart, and I look at bond yields. People used to have bonds. We don't now because there's no yield. So yes, the system owns them, but as individuals, they're not interesting to us. So that's taken the bond market, the biggest, largest source of investment on earth, has just been taken out of the equation. It's just not relevant to us. You might as well own cash. And the Fed decided, well, we can't allow, because all the companies are so in debt, we can't allow the credit markets to blow up because that would be a house of cards. So they started buying credit. So credit now doesn't react to the business cycle. So that's taken that out. And then we've got the currency markets. So now we're not talking about the debasement of fiat currency overall. We're talking about the dollar versus the yen versus the euro. That's been flat for 6 years now because the governments don't want it to move, because if the dollar moves too far, it blows up the world again. So what we've got is very few avenues to actually make money. Now, real estate, sure, but it's expensive for most people. And also, banks don't want to lend necessarily unless you're rich already. So what avenue have you got left? You've got the equity market, all-time record high valuations. Okay, money's going to keep going in and it'll get more crazy in valuations. But is that the best bet? Or is it the market that has a 2 trillion valuation that could go to 100 trillion and is the future of the entire financial system and global business model? It kind of makes sense for people to start reallocating assets.
Thank you for watching. If you enjoyed this video, here's a video on investments that you need to own for life. And while you're at it, download our free guide on how to start generating passive income. And as always, keep hustling. If you still believe in the long-term value of this company, you're just not happy with the price, then you are switching sides. That's why you got to start by understanding your goal and knowing what your strategy is, because if you're investing for the long term, then you got to understand market crashes are a part of the game.